Good morning, everybody. It's Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for May 20th. It's Wednesday, hump day. Well, go to bed and the markets are bid. Wake up and the markets are offered. Crude oil was trading 105. It's traded down to 100.75, down 250 right now at 101.60. And it's turned the grains sellers. D's corn hit 98 and a quarter, 99 and a half as a high last night. As I'm talking to you right now, we're down a nickel, trading at 92 and three quarters. So grains having trouble to hold on to bid because crude oil is coming down. July beans hit 12.12 on the open, traded down to 12.01 last night, down at 12.03 right now, down 6.5. July wheat opened at 68, traded down to 60. So that's the story this morning. July corn down 5.5, July beans down 6.5, July wheat down 2.5, Kansas City wheat down 3.25, and it's basically all due to headlines. You go to bed, and the markets are bid. Wake up in the morning, they're offered. We'll see where we are once we reopen in about 45 minutes. We're going to watch the live cattle today very, very carefully. August fats did finish up a little bit yesterday, up 10 cents, 247.25. But again, that chart's very, very sensitive to whether or not we're going to take out these all-time highs. August is at this 250 level. We've tested it 1, 2, 3, 4, 5 times since the end of April. So 250 is what it's all about. Obviously, if that opens up, the moment we settle above 250, that is people talking about $3 fats. In the August feeders, 360, 365, up 480 yesterday on a recovery bounce. That contract there has been basically trading in a from 378 down to about 358, about a 20% range here in the past 2 weeks. I think if we can get August feeders above 370, then you're going to see a new push for money to come in. Same thing, the market's not really trading any new news. We haven't had anybody talk about opening up the border to Mexico. We haven't had anybody talk about the screw worm in the headlines again. At the end of the day, we're still, at 363. What's your risk? Your risk is some black swan thing where we go sub 340 and we go back down to where we were in November at 290. So that's a good strategy, I think, to have a cheap 5 or 6 cent put out there under the market. Help you sleep at night because when and if this thing does turn, you're not going to get a text message the day before it happens. The hogs are in a different situation. Hogs are at key technical levels. We had a big, big rally in the hogs between November and the contract highs here when we were trading, 113 and July hogs back in March. This 102 level, very, very, very big, 62% level. If that fails, you could see some long liquidation. Remember, the funds are long pretty much everything in the grains right now, including the livestock. But I would watch the hogs carefully. I think if we get sub one, like 101, then you could see some more long liquidation. So that's how I see it today, this Wednesday. Again, we are in the grains. We are just whatever the story is for crude oil. That's what's driving us. We will see if we can break away and get some independent strength. Big picture, D's corn at 490, not bad. Novi beans at 1195, not bad. And when you think about where we were on Friday, we're still 30 cents higher than where we were on Friday in the beans, and then corn. The low for D's corn on Friday was 480 and a quarter, so we're still 12 cents higher. So maybe we're not going to sell the high this year, but these are still really good levels. Get some sales done, get some hedges on, and we still have a lot of weather market ahead of us. All right, this is Chris. Have a great day. Take care.